Welcome and thank you for joining us for today's webinar, Navigating Risk, Transforming Today's Challenges into Strategic Advantage. Before we get started, here are a few quick notes to help you stay connected and informed. Welcome and thank you again for joining us for today's webinar, Navigating Risk, Transforming Today's Challenges into Strategic Advantage. Before we get started, here are a few quick notes to help you stay connected and informed. Today's session is being recorded. We'll send you the link afterwards so you can revisit the conversation or share it with your team. If you have questions or insights during the webinar, use the question panel in the upper left corner of your screen. We're here to engage with you. At the end of the webinar, a short survey will appear. It only takes a moment, and your feedback helps us shape future conversations that deliver the guidance and clarity you expect from Hub. Now, I would like to introduce our moderator for today's event, Tina Sen, President, Hub Canada.
Good morning, everybody, or good afternoon, depending on where you are. Welcome, and thank you for joining us for today's conversation on navigating risk. There is no question that we are operating in an increasingly unpredictable world. Whether it's trade disruptions and shifting tariff policies to economic slowdowns and global instability, many businesses are asking the same question, which is, how do we stay resilient when the ground keeps moving? We are seeing a lot of real-time pressure on the ground, higher input costs, tighter margins, supply chain friction, employee benefits pressures, and increasing executive liability risks. For some sectors, this uncertainty is slowing down investment and hiring. Others are seeing opportunity if they can make informed strategic moves quickly. But today is really about grounding in what we can control and staying the course on risk management. It's about reframing today's challenges and identifying how you can use risk management as a lever, not just a safety net. At Hub, we believe that risk management isn't just about protecting downside. It's also about uncovering opportunity. And that might mean leveraging data to reassess your supply chains, reevaluating your trade exposure, or using alternative risk transfer strategies to stabilize costs. Our panelists today will dig into exactly that. Today, I'm joined by some extraordinary colleagues, leaders at Hub who are working with clients across industries, helping them respond not just to the risk, but to the bigger picture. How are businesses building resiliency into their models? What are those overlooked levers that can actually fuel growth during turbulent times? And how can risk strategy become a more central part of your business strategy that supports your growth and gives your people support and confidence for the future? From today's conversation, you'll walk away with some practical insights, some risk mitigation strategies that will help you protect your organization and support your workforce through times of uncertainty. If you have specific questions about your organization, please complete the survey that's going to pop up at the end of this webinar, and we will follow up with you to review those questions in detail. Now, let me introduce this incredible group of Hub leaders who are working closely with our clients in Canada. We have Derek May, who is our Vice President of Technology and a cyber risk leader at Hub. Ray Monteith, our Senior Vice President and Risk Services Leader. John Middleton, our Vice President of Complex Risk and Trade Credit. Faisal Meha, our Chief Innovation Officer for Employee Benefits and Retirement. And Janique Anse, our Chief Marketing and Brokering Officer in Quebec, who supports our partnership with our Canadian and international insurers. So let's dive in. Let's start the conversation with what risks are top of mind for clients now. What are leaders most concerned about and what are they missing? Derek, maybe I'll start with you. From a cyber perspective, what's coming up in your conversations with clients?
Yeah, I mean, as you already mentioned, we're dealing with, a turbulent time, right? There's a lot of focus on these tariffs. They're evolving, they're changing. No one really knows what's up or what's down. And unfortunately, that's creating a big distraction for our clients. They're worried about their bottom line. They're worried about their employees. They're worried about supply chains. What they're maybe not worried about so much is cyber risk. And that's exactly when threat actors like to strike. If I take you way back to the COVID days in the early 2020s, 2021s, that's when we really saw cyber losses spike because people were struggling to work from home. They were teaching their kids math. They were doing a bunch of things that they probably shouldn't have been doing. And in turn, the real winner there was the threat actor. We saw cyber losses go through the roof. So really two main things that we're watching really closely from a frequency and severity perspective right now are ransomware and social engineering fraud. So ransomware from a severity perspective accounts for about 75% of all catastrophic loss that we see. And this is where you're going to see millions potentially of losses. From a frequency perspective, as I mentioned, social engineering sort of carries the day. This is where we're not necessarily going to see headline grabbing losses. They might be hundreds of thousands, not millions necessarily. But this is where we see the most frequent loss for our businesses today. And when I say social engineering, just to clarify, I mean our teams are getting duped into sending money to the wrong people. It's a really easy way for the threat actor to monetize. As I just described, these losses can be significant, so it's certainly something that we need to keep our attention to, even though we might be distracted with some of the other matters at hand.
Yeah, it's really a matter of when, not if now with cyber. Thank you, Derek. That really underscores how interconnected systems can bring entire operations to a halt. So maybe Ray, building on that, what kinds of business continuity concerns are you seeing?
Well, there's a tendency right now to focus on the big news events, the big picture, the macro view of what's going on in world events and geopolitical and significant economic issues that are transpiring around the world. And certainly many organizations are bracing for or have already felt the impact of some of those events. But we're also hearing a lot of concern about short-term business continuity concerns that our clients are having. Many of our clients find themselves one event away from a significant disruption, and they're asking basic questions about being able to make payroll this month, and certainly others are seeing significant margin erosion due to inflation and trade pressure. Overarching, the anxiety is real during these times.
Yeah, it's unbelievable. Companies really are navigating volatility from all angles, and the implications and risk from the results of tariffs, coupled with those day-to-day realities that you're talking about, keeping that business running, it's tough. John, you're advising clients on trade credit. What are they facing as tariffs and supply chain issues evolve? Oh, you're muted, John.
My apologies for that. Can you hear me now?
Yeah.
Raise points with regard to margin are well taken, and certainly that is something that is really concerning for our clients, and more in particular to the companies that they're selling to. The tariffs are forcing our clients to start thinking about rerouting goods, reconsidering their supply relationships, and perhaps maybe even having to reprice contracts because their input costs are changing. And so these risks are both operational and financial. Our clients are also starting to consider new trading relationships. So the traditional north-south trade flow may start to pivot to more of an east-west trade flow, particularly if within Canada we're able to reduce those interprovincial trade barriers, which I think the government was thinking about trying to bring those down by July 1. So that could be an opportunity for companies to expand and do more business across the country and enter new relationship with new customers that they don't know. And then people may also be looking to places like Europe or Asia Pacific, areas in the world where Canada already has free trade agreements, and there may be opportunities to expand their trade into those markets. But as companies start to pivot towards that, they need to continue to focus on the credit quality of these new buyers and customers. And credit insurance is a tool that's getting a lot of excitement about that, because it's a great idea to use a third-party underwriter who has really, really good databases of information on companies around the globe to sort of vet your buyers and let you know that, hey, this is a risk that's worth taking. This is a relationship you can establish and move forward with some comfort, knowing that you're able to offload 90% of the risk onto an insurer. So that's something that people are quite interested in at this moment in time.
Yeah, it's really a peace of mind to help you sleep when you're entering those new markets. So these pressures are also affecting talent strategies too. Faisal, what's top of mind when it comes to the people and benefits side of the equation?
Yeah, thanks, Tina. There's definitely a lot to unpack here. So, a common theme that we see in this environment is how can we do more for less? So, and there's basically seemingly opposing pressures coming at business leaders in the people space. So, on the one hand, there's major uncertainty with everything going on, which Derek, Ray, and John alluded to earlier. And with that, there's the pressure to look at containing or reducing costs as much as possible. And then to add to that, prior to the tariff talk, our Outlook survey revealed this year that improving productivity was number one thing on the minds of senior business leaders. So you have tackling uncertainty, reducing costs, and improving productivity on one side of the equation. And on the other side, the data is very clear about challenges in the workforce as it pertains to employee financial stress driven by rising cost of living and debt, supporting employee mental health. There's also managing multi-generational workforces with fragmented needs. And then you have managers that don't have the tools to navigate this current environment. There's also still a focus on retention, but it's actually shifting more to strategic roles versus a general basis. When you look at the numbers back in March of 2023, unemployment was 5%. It was all about general retention. You fast forward to March 2025, and that number jumped to 6.7%. And if the current environment continues, the estimates for Q4 range from 7 to 7.5%. So, you have uncertainty, cost, and productivity on one side, financial stress, mental health, and manager training and strategic retention on the other side. How we really help in this situation is really help clients see the bigger picture by outlining the data showing that there's not really two opposing sides of the equation. There's really solid data to show that a workforce that strongly supports mental well-being and financial coaching is actually more productive. And it's not always about spending more money on the plan, but being more strategic about dollars spent.
Right. Makes a ton of sense. So, with all of these rapid decisions, the pressure on executives is only intensifying. Janique, how is this showing up in boardrooms?
Absolutely, Tina. I mean, in today's really fast-paced business environment where, high-stakes decisions are just a regular occurrence now, the risk for executive liability is really on the rise. The board of director plays a pivotal role in really overseeing all the effective risk management strategies, which is the cornerstone of any sound corporate governance. And so by really proactively addressing all these potential risks, board can really build organizational resilience and enabling the business to navigate through, current challenges, but all the future uncertainties that we're living right now. I mean, there's really as the number and really the variety of risk in the business continue to grow, such as, let's think about financial risks, such as market volatility or credit risk with operational risks like chain disruption or regulatory compliance or strategic risk also, including competitive pressures or innovation challenges or cybersecurity, like what Derek mentioned. There's, an increase in data breaches and ransomware attacks. All of these risks are really impacting directors, and the role of directors in managing these risks become increasingly critical.
So, Janique, let me piggyback on that a bit. You talk about leaders facing these increased exposures with the requirement for these fast-paced decision-making moves. So how are the leaders exposing themselves without even realizing it? What are those things that they should be thinking about?
Well, you're right. Many clients are not necessarily proactively managing the boardroom risk, especially in today's fast-paced environment, because things are going so fast and decisions need to be made very quickly. But this is precisely the time when they should be enhancing their corporate governance practices, actually. So to mitigate these risks effectively, I think one of the crucial things that boards can do is really to maintain comprehensive documentation. And what does that include? I mean, some of it is very basic, like including detailed meeting minutes, of course, but all of the material that's reviewed as well and considered during these decision-making processes. I mean, given the complexity and breadth of information required for boards to make these decisions, they should be seeking expert opinion as well and be conducting thorough risk assessments as well. And so they can really make well-informed decisions. I would also add that, obtaining legal advice can really be a great option when making these significant changes. Especially when anything related to compliance, of course, and applicable laws and regulation. But if you think of a company that's thinking of entering a new market, that would be an excellent time where they have to do this, and it's not something that they can shortcut and step over. So by taking these proactive steps, I mean, board of directors can better prepare for potential lawsuits and demonstrate their commitment to good corporate governance and effective risk management, which will really be their best defense in case a situation does arise. So even though decisions need to be made really rapidly, it's crucial not to compromise on good corporate governance. And in these changing times, I mean, risk can be significantly amplified, making it even more important to really that never ever to avoid any shortcuts.
Really strong points, Janique. So when decisions are happening fast, it's easy to miss those governance gaps. So Ray, you also work with a lot of clients on helping build those resiliency strategies. What else do you see clients overlooking?
These are challenging times, and clients are often stuck in a reactive survival mode and focused on near-term concerns. They're so busy reacting to events right now that they tend to miss the larger opportunity, as Janique just pointed out, to be proactive and to take a much more strategic approach to managing their risk. That's a significant opportunity that is being missed right now by a lot of organizations as they are just grappling with the need to be rapidly responsive. But the questions that organizations really need to be asking are what are the real vulnerabilities to their organizations and to their operations? But conversely, what are the opportunities that are being presented in these rapidly changing circumstances?
Yeah, you remind me, Ray, there. My father used to always say to me, every problem is an opportunity. I think that's so true. So I know when we were prepping for this presentation, Derek, you noted that another area where we're seeing these blind spots is around tech systems. So can you talk a bit about where businesses are vulnerable and may not even realize it right now?
For sure. We live in such a heavily interconnected world these days. If you just think of your day-to-day business processes, we're using email providers, we're using cloud hosting providers, we're using outsourced IT providers in some cases. And we're also, often using non-IT suppliers as well through the whole supply chain. If you take one cog out of the wheel, the whole system can collapse. And we saw two really good examples of that earlier this year. There was two claims. One, the first was CDK. So CDK is a auto dealer management system software provider out of the US. They had a ransomware attack that took them offline for 2 to 3 weeks. As a result, we had 15,000 auto dealers across North America that went down. They basically were reduced to selling cars with pen and paper. It was an absolute nightmare. We have a lot of these in our portfolio across Canada, and we know firsthand just the pain that they went through as a result of this third party that they were reliant on. From a non-security risk perspective, we saw the CrowdStrike example. So CrowdStrike pushed out a faulty upgrade that ultimately crashed all of the systems of their clients, including many large airliners that had to ground their entire fleets for a period of time until this was corrected. This cost hundreds of millions of dollars to their bottom line as a result of those flights not being able to take off. Again, there was no direct impact from a security perspective on those airliners or for the auto dealers. It was always these third-party vendors that had this slip up, which ultimately caused this large loss. So when we talk about these, $100 million losses, often our clients come back to us and say, well, why us? That we're not that big airliner. We're not a big auto dealer necessarily. So why are they targeting us? And the simple response is that they're not simply targeting you, they're targeting everybody. They're using scanning technology to scan the internet, look for open ports. And if you happen to let them in the door that day, that's the one that they're going to target. But knowing that, we obviously have to protect our own systems, but we also have to do some due diligence with these third parties that we're heavily reliant on. Because as we've shown in these two examples, if they get hit, you also could be hit as well.
Yeah, a really important highlight, Derek. We all operate in such an interconnected environment, and we work with clients to review their operations to determine those exposures and provide guidance on their policies. Maybe just segueing, John, what about assumptions around trade? Are there any examples there?
Certainly there is, and so trade credit insurance is a bit of a blind spot, I think, for some companies right now. Companies assume that their clients are going to pay them, and we all know a sale is not a sale until you get paid. So it's critical to get that money in the door. And what we're seeing with these tariffs is it could put some squeeze on liquidity, and that can have a devastating impact on companies, and it can be a bit of a domino effect. So what we're looking at here is some companies may choose not to pass all the tariffs on 100% to their customers, and if they do that, then they're going to find that their margins are getting squeezed a little bit, and that's going to impact their profitability. So we're sort of in early days here. We're not sure how this is going to play out, but certainly I can tell you that that the trade credit insurers themselves, the risk managers within those organizations, they're closely monitoring U.S. credit risk in light of this new environment. As a backdrop to this, Export Development Canada paid the majority of their credit insurance claims last year for bad debt losses on sales made to buyers in the USA. So that's where a large portion of their claims came. And people don't think that that's actually where you're going to see it. They think it will be coming from emerging markets. But in fact, they're seeing that there's a lot of bad debt payments happening, a lot of bad debt activity happening out of the US market. So we've got that happening right now. We have clients already telling us notionally that, hey, we're seeing slowdown in our payment trends, right? And this is often a precursor to what happens when a recession kicks in. So there is obviously quite a bit of concern in the marketplace about where the economy is headed. And certainly economists are suggesting to us that the economy is due to slow down, and a recession may happen depending on what happens with these tariff decisions over this 90-day period. So you sort of see these tariffs perhaps exacerbating the situation. And we believe that the underwriters are going to continue to really focus on on managing risk within the U.S. market. That's going to be critical for them in order to be profitable this year. But they also have to look at the reciprocal tariffs, because you could have the same impact in other markets where reciprocal tariffs are charged. That could impact the credit risk of buyers in those markets. And so that's another part of the element of risk management within the underwriting world that they have to think about, and it complicates the overall dynamics of the credit market. So we're in really uncharted times here from a credit management perspective for organizations, and you have to look to the credit managers and the credit team within your organization to really start providing some feedback to management and the sales teams to just let them know, hey, this is what we're seeing, and you need to be aware of this as you try to grow the sales and manage your customer relationships.
Yeah, no kidding. It's so complicated. It's truly a domino effect. If one part breaks, the rest follows. Yeah. So, Faisal, how does this all connect back to people strategy?
Yeah, Tina, there's a few questions that come to mind for employers to consider that maybe don't come up enough. The first one is, what is our workplace fragility costing us today and down the line? So what I mean by that is we see great modeling on things like wage inflation, RSP matching costs, benefit spends, but not enough around quantifying the cost of underperformance, burnout, or poor plan design that doesn't support employee needs that correlate to productivity. So that's one question. The other question would be around future proofing. So a key question is our benefit strategy aligned to where the workforce is going, or where it was 5 or 10 years ago, when we could get away with a one-size-fits-all static plan where we could just check a box to say that we offered benefits. There's a quote from G. Michael Hoff that comes up a lot lately, which is, good times create weak men and weak men create hard times. So I'm going to connect that to benefits and total rewards. So what I've seen is that, good times create and hide unsustainable plans, because in tight labor markets, we saw a lot of siloed solutions and fear of cutting back despite rising claims, coupled with a fear of even minimal employee disruption. So all those things happen, and then what happens is, good times create these unsustainable plans, and unsustainable plans become major issues during hard or uncertain times like we're having now. So times like this present a real opportunity with the right advice to create what we call a resilient benefits design. We first introduced this concept back in Outlook of 2025, prior to the tariff threat, but now it's even more relevant. It's really a framework that goes back to basics and revisits the foundation of your plan, and then building on it, targeted, well-communicated, data-driven solutions that connect with your employee segments in a language they understand, all with a strong eye towards sustainability. And I'm not really suggesting sort of cutbacks per se. What I'm saying is that oftentimes there's a communication gap versus a coverage gap. And that's good news when it comes down to that central theme of doing more for less. So take drug plans, for example, which is one of the largest sort of cost segments of your plan. This is a great opportunity to have important sustainability discussions with your advisor on things like formularies, the potential cost savings of biosimilars, preferred pharmacy networks, step therapy, building a strategy around obesity drugs. There are ways to partner with employees that really minimize disruption and create a far more resilient and sustainable plan with a solid why around communication.
Love it. So maybe I'll shift the conversation a little bit to what clients should be doing right now beyond some of the great suggestions already. And let's look at some actionable ways that organizations can really weather disruptions like we're in now and find those opportunities. So Derek, going back to cyber, what's one step clients should take today?
I mean, first and foremost, it's having a policy in place. We're still seeing many clients without cyber, and so getting that in place, but not just putting any policy in place, working with a professional to help customize that policy to your unique needs, but also benchmarking appropriate limits so that the policy fits the bill, that your exposures are covered, and then you have the appropriate coverage there. But also it's taking it one step further, and it's many might not necessarily know this, but every cyber policy comes with a panel of vendors that are ready and willing to assist in your time of need. I sort of call this the mop-up crew. So you have that breach, you call the 1-800 number, and you immediately get put in touch with the breach coach, the privacy attorney, the forensics, the ransom negotiator, the PR team, and all of those good resources. And so making sure that you are familiar with maybe who those are on the panel. And if you have existing relationships or you want to create new relationships, it's sort of getting that out ahead of time so that relationship has already been built, conflicts have been cleared, and you're just removing roadblocks that could be in your way when and if you need to use these resources.
Yeah, preparation is the best way to mitigate the problems when the loss happens. I love that advice. Ray, how do you guide clients through mapping their risks?
Well, just talked about the importance of pre-planning for an incident to ensure a thorough and effective response to any disruptive event that impacts an organization. We really work with clients to understand how an event can impact their organization, and rather than itemizing every possible scenario, we really try to support organization to take what we refer to as an all hazards approach and look at how events can impact the organization across a number of domains, including their properties, their people, their supply chains, their IT infrastructures. We know that many organizations don't take the time to implement obvious and basic risk management solutions, such as continuity, enterprise risk management systems. And these are excellent tools that directly impact and support resilience. They're well-established playbooks that organizations can implement to help navigate known risks. they're they remain underutilized, unfortunately, and consequently, organizations often remain unprepared for known risks, let alone the unknown risks that are coming around the corner. Many organizations tend to solve for events that have taken place in the past rather than those things that are coming at them and may lay just over the event horizon. So it's important to take a step up and out and look at risk from a broad perspective and not just from an insurance coverage and policies risk transfer perspective, but also looking closely at operations, people, suppliers, and integrate a risk management lens into decision making. As businesses evolve, risks evolve, and so constant assessment, mitigation, and planning is essential, and testing is crucial. It's extremely important always that organizations evaluate what they put in place. There's a military adage that says no plan survives first contact. Or perhaps more familiar to everyone else is Mike Tyson's, what's often attributed to Mike Tyson, everyone has a plan until they get punched in the mouth. It's really important to be thinking ahead and to be looking at what you're implementing, how you're planning, and really evaluating how effective your plans and your response strategies are in the face of rapidly changing environments.
Unfortunately, the phrase "the only constant is change" is our reality. It's certainly not a cliche. And when organizations focus on developing and consistently assessing their enterprise risk management strategy, they are definitely more favorably positioned to weather risks, those that we know, those that may be unexpected. John, when businesses pivot to new suppliers or markets, what should they reassess? Muted again, John.
I'll get this right eventually before we're done. Yeah, sorry. To touch upon what Ray was saying there, like it's really critical to sort of look at the credit risk profile of your customer base and more the political risk profile of your supplier base. If you're thinking about shifting supply chains or entering new markets, the assumptions you made last year may no longer be valid. And so it's really, I think, an important time to reassess your relationship with your key suppliers and your key customers. You want to make sure that your supplier is going to have the financial ability to continue to provide you with cost-effective supply. And obviously, more importantly, you want to make sure that your buyers are able to pay. That's going to be critical as you move forward. So you want to make sure that there's an adequate risk assessment done on the credit quality of the companies that you're doing business with. I think it's also a time where companies can look to opportunity, as you mentioned earlier, Tina, and something that companies may be looking to research new markets. They may be looking to launch new products, do things to try and be more innovative in order to capitalize on opportunities that might arise right now. And one of the things that credit insurance will afford a company is if you insure your receivable, the bank will lend more against an insured receivable. So they'll take the margining ratio on the receivables from 75% to 90%. So you're able to borrow more on the same asset base. And if you need some cash for some short-term liquidity issues in order to help you expand your business, you may want to tap into credit insurance, treat the insurance almost as a cost of financing, and leverage that additional financing to help grow the business and take you into the right direction as we continue to move into 2025.
It's funny. I remember when I started off in my career many, many years ago, first being introduced to credit insurance, and the power of that increased borrowing potential just blew me away. It's such a good vehicle for that.
A lot of our clients are using it for that particular reason.
Yeah, I bet. So as leaders are making these pivots, their risk profile is changing. Janique, from a leadership lens, what other risks do leaders need to be aware of?
Well, I think they need to be aware, first of all, that they can protect themselves with the directors and officers liability policy. And it's the time right now to be looking at that policy, making sure you have one and that your limits are really adequate, because it's not when, the issue really arises that, or you're in a financial difficulty or financial difficult situation at that point, that you should be looking to purchase that product. It's really beforehand. So it's really being proactive and either revisiting the coverage that you have now to make sure that the limits are adequate and that the coverage does respond to your new reality now, or what the company is envisioning. So whether be it expanding to other markets and making sure that your policy would respond more on a worldwide basis, or if you're looking at a divestiture, making sure that you can have tail coverage on your policy for all of those sort of prior decisions that were made in the case of a suit coming on later on. And so it's really revisiting sort of the insurance product that you have and making sure that the limits again are adequate and respond to the actual exposure that you now have, with all the potential changes that are happening. So I think that it can also be advantageous for the client by looking at this, because regular policy reviews are really just essential to ensure really compliance with latest standards and avoid any legal issues. But it can also help right now to do it by, it could possibly optimizing the premium as well, because if it is a divestiture, then possibly it could be, better and help the company financially as well. So it's really a good time to sort of look at all of it together and see that it responds the right way. And sometimes it could really be advantageous at the same time. So, as the business pivots and adapts to all these new strategies, their risk profile can really change significantly. And so with faster decision and increased scrutiny, it's really vital for them to ensure that the leadership is really properly covered during these times when they're making these important decisions.
Thanks, Janique. And then Faisal, we know employees are at the heart of any business. So where do leaders start?
Yeah, Tina, you won't be surprised to hear this from me, but I think it all starts with your advisor to gather and understand your data. I think, it starts with your claims data, your turnover data, your absence data, your retirement savings plan enrollment data, and your employee persona data. There is no one size fits all solution, and personalized and curated solutions can only happen with strong organizational data. On a side note, there's actually many other stakeholders at an organization that could benefit from what the benefits and retirement savings data is telling us about the health of the group. It's often surprising that senior leaders to see the prevalence of mental health claims, for example, in their organization when they're exposed to it. From there, there's also an opportunity to really audit the plan for sustainability with your advisor from both a claims standpoint, demographic standpoint, and plan design standpoint. For example, there's 500 new drug submissions under review by Health Canada, and there's amazing new treatments coming up for Alzheimer's, diabetes, ADHD, and obesity drugs. So the key thing is what might be the cost exposure and impact of a plan, but also how do you balance that out with the benefit to employees versus existing treatments? And then there's also other levers to sort of manage the drug plan that are really, really important that haven't been looked at in the past during the good times, which are really around looking at formularies, looking at coverage levels, looking at biosimilars and that type of thing. And it's really looking at positioning employees as sort of partners in this strategy and partners in sustainability, because oftentimes the decisions are sort of made in a vacuum. Another key question I think is important as part of that sustainability analysis is, do we have the right funding arrangement in place? So I mentioned, other stakeholders being really interested in the benefits data. I was speaking in a risk management panel a few months ago, and it was surprising for many corporate risk managers in the room about the risk that is assumed or not assumed in the funding of benefit plans. So a key question would be, does the management of risk in the benefits plan align with our broader corporate risk management strategy? There's some really good conversations to be had there. And as you're going through that sustainability audit, the key question is to ask, where are we vulnerable if costs spike or conditions worsen? It's very similar to the all hazard approach that Ray mentioned earlier, directed towards benefits. And it's also connected to what Ray said. It's looking at sort of future risks versus focusing on the past.
It's I hadn't even put as much thought into it, and you're clearly the expert, but the corresponding spike in cost that comes just with these significant advancements for people's health and wellness. So important to do that audit and really understand that strategy when it comes to that sustainability of your plan. As we're coming closer to the end of our session, we're moving a little faster than we thought we might today. Let's look ahead. How are you helping your clients stay ahead and seek opportunity in uncertainty? So Faisal, let's start with you. As organizations try to support their people through uncertainty, what's top of mind?
Yeah, I'll just go big picture for a second, Tina. I think what the last 5 years has taught us is that values aren't really fully revealed during good times. They're actually revealed during difficult and uncertain times. So I would suggest right now is an important time for a business to make intentional decisions that truly signal those values because employees are watching, not necessarily just on what's said, but if they're looking at what's being funded, what's being prioritized, and what's being protected when things get uncertain. So I think I would start with that big picture. And then going back to my earlier point, I think a well thought out, aligned, and communicated strategy around total rewards, combined with making employees partners in plan sustainability, will be key to success in the future and that resilient plan design. I think all of our actions right now around total rewards are a story that becomes that signal to the market, our current employees, our future employees. So I think that's really critical. And then just tying it into that building of the resilient plan design. It's not about spending more. It's really about spending smarter and utilizing the data to help you spend smarter and plan for upcoming volatility. So I think now is the absolute right time to pressure test your drug plan for sustainability, to review funding arrangements and stop loss triggers, to review your retirement savings enrollment numbers. Are people not enrolling because of a education standpoint, or is it just they just can't afford it? We need to know why, and then you can sort of address issues accordingly. And I think any trade-offs that are made now should be intentional. And it's important for leadership teams to ask, are there trade-offs we're making today aligned with our culture? And I would just close by saying, the stakes are extremely high, right? Retention, productivity, absenteeism, high cost drug claims, those aren't just HR problems anymore. They're operational risks, reputational risks, and in many cases, financial liabilities. So I would encourage total rewards and retirement savings programs and employee communication be looked at from a strategic lens versus a siloed once a year review that isn't really connected to the broader picture.
Great comments. Thank you, Faisal. So, and absolutely supporting employees is such a key part of a business staying resilient and competitive. John, from the trade credit side, what about you?
I think I'd like to echo what Basil said. During risks are revealed during tough times, and so when times are good, credit risk is not really front and center in terms of the mind of management. And I think right now what we're doing is we're trying to guide our clients to think proactively about their trade credit exposure. With tariffs and shifting global supply chains, the year ahead will bring both risk but tremendous opportunity. So we want our clients to be ready to capitalize on that. We're also helping our clients expand into new markets, tighten their credit controls, and make sure that they're protected if a major buyer were to default on payment or go insolvent. Trade credit insurance is a really powerful tool for business, especially when clients are trying to grow and grow smart despite all the volatility in the market.
Yeah, I mean, growth absolutely may be achievable even in these uncertain times, right? If the right safeguards are in place.
Absolutely.
Janique, what are you advising leadership teams to consider as they pivot their business?
Well, I would echo really what Faisal and John said. I mean, in these difficult times, I mean, the risks are higher. And so in today's business environment, speed is crucial. We know it. It's an element of effective leadership. However, managing risk is just as equally as important. And so we're really trying to support the leadership teams by really helping them slow down a little and just, look at the corporate governance and make sure that they have those documents and that they're taking meticulous notes and that they're keeping, a detail of all of the decisions that are being made. And so this really involves, well, of course, reviewing their corporate structure with them and ensuring that they have clarity and strong risk management and accountability in place there. Additionally, of course, we're looking at their directors and officers liability insurance coverage and making sure that they have adequate coverage in place and reviewing that as they're making these decisions and as they're pivoting their business, making sure that the policy will respond adequately following these decisions. By empowering really these leaders to move swiftly while being properly protected will really enable them to, make more informed and confident decisions. This approach really minimizes the likelihood of unexpected challenges and ensures smoother operations really in the long run and really helps protect them in the long run, given all these uncertainties right now.
Exactly. It's about confidence, isn't it? Not just speed. So speaking of confidence, Derek, how can businesses be proactive?
Yeah, and I mentioned earlier about organizing and planning for that breach response, reviewing those vendors and whatnot. But building on that, to gain that confidence, we need to have a robust incident response plan built out, and we need the organization to be comfortable with it. I know Ray touched on the planning a little bit earlier in the call, but for cyber, this is one of the most important things that we can do. If a client doesn't already have an incident response plan built out, obviously that would be the first step. But if they do, it's refining it. It's making sure that all of the cyber policy information, all of the broker information, all of the breach vendors are added to it, so that, again, should an incident occur, you can pull out that one piece of paper and start following it. But further to that, it's actually practicing the plan. So, it's one thing to have the piece of paper when the incident occurs. And as a quick side note, a little pro tip is to keep that piece of paper in paper form and not on your computer, because if you're having a ransomware attack, it's going to be very difficult to access your incident response plan if it's online. So have it printed out, old school, on the side of the desk so that you can access it when your time comes to use it. But then further, it's getting all of the key people around that organization at a table to run a tabletop exercise, to really plan through whose responsibility is what. Who's going to chime in here? When do we notify insurance? When do we notify the lawyers? When do we, get different pieces of the puzzle together to start triaging that loss? Our favorite sports teams would never show up to their game without having practiced, right? Maybe the Canucks, because they didn't make the playoffs this year. But otherwise, everybody's going to show up having practiced, and our organizations should really be doing the same to ensure that if ultimately a breach occurs, we're ready to proceed with effective response.
So everybody knows Derek is from Vancouver now, as am I, so that really resonated. But it is that practice, and that proactive lens is so important, especially as threats evolve fast. So to end us off, I want to turn it back to Ray. As this uncertainty becomes more common, how are you advising business leaders to build resilience?
Well, Tina, we don't know what's coming exactly, but we do know that it's coming faster than it ever has before, and global interconnectedness means that the velocity of change is unprecedented. It's difficult for people and organizations to keep pace with this rate of change. So it's increasingly important for organizations to be agile in the face of change, and if they're not, they'll find that their operations are disrupted, and that can become an existential risk for any organization. Can the organization survive the disruption? So we're really focusing on and reinforcing an enterprise risk management way of thinking. Not just line by line coverage to help clients map a way forward in this rapidly changing world. Clients are learning that agility comes from understanding the whole field within which they operate. So we're mapping risks across people, operations, systems, and supply chains, and helping clients create actionable plans that they can readily implement. When leaders have visibility and a framework for planning and responding, they can respond appropriately, and they can also spot opportunity even in the midst of disruption.
Ray, I think that is really great words to kind of wrap our presentation today. You know, we at Hub hope that today's presentation offered some valuable insights to consider as you're thinking about your risk mitigation strategies, both in today's uncertain environment and just so you can prepare for whatever is ahead of us. And at Hub, we really work with our clients to identify that risk to their business. We put strategies in place to protect what matters most, and we uncover opportunities for resilience and growth. And by discussing topics such as, but not limited to, workforce strategy, operational changes, financial exposure, we encourage our clients to ask yourself questions like, have you made any changes to your businesses recently that could impact your exposure, such as expanding operations or engaging new vendors or entering new markets, as John referenced? Do you have a plan in place for managing the financial impact from a cyber incident, the leadership decision or a customer default? Are you providing the right mix of support, whether it's financial, mental health, flexibility, to help your employees thrive in today's economic climate? Have you reevaluated your insurance and risk coverage in light of recent operational or workforce changes? And do you think your risk strategy is flexible enough to adapt as your business evolves? So I'll just leave you with those thoughts, but I do want to say a big thank you to our panelists, and more importantly, a thank you to everyone who joined us today. Please do take the survey following the end of this call to let us know what is top of mind for you and how we can help you address it. Have a wonderful rest of the day. Thank you.